Welcome to Focus Study Live Room. So today we are doing composition levy. Composition levy is under section 10. Now what is composition levy? So see, if you are having a lower amount of turnover, and in that case you are eligible to go for composition levy. It will have lesser compliances comparatively and the lesser rates of taxes that would be leviable. So, composition levy is an option for specified categories of small taxpayers to pay GST at a very low rate on the basis of turnover. So, see, what are the advantages? Advantages are that you have lower rates of taxes and you have hassle-free simple procedures for such taxpayers. So as I said earlier, the compliances are also comparatively lesser in case of composition levy. Then it has simple calculation of tax based on your turnover. So whatever is your turnover, on that only we are applying certain rates. So these makes your calculation also simple, unlike the regular scheme wherein for each of the supply, you are applying your GST rates and accordingly you are calculating your taxes. Now, this also has a very simple annual return. See, because all the compliances are lesser, so even for this annual return, the compliances are less. Now, composition levy provided under section 10.1, 10.2 and 10.2a. So we have three subsections wherein you can opt for composition levy. So the very first section that you will be checking for composition levy is your section 10.1. Now, if suppose you are not eligible for your section 10.1, then you can check if you are eligible for section 10.2. And in case where you are not eligible for either of these sections 10.1 and 10.2, then you will be going to check this section 10.2a for applying the composition levy, that is whether you are eligible to opt for composition levy or not. Then we have procedure for opting for the scheme. So now what are these procedures for different category of people? So the persons are divided under various categories, and for each of the category we have a defined procedure for obtaining for this scheme. So the first one is new registration under GST. So if you are applying for new registration under GST and you are opting for your composition scheme, then what you should do is you should intimate in the registration form to the department. Okay, and what is the date for effective date for composition levy? It is the effective date of registration. So whatever is the date of your registration, the same date will be applicable for levying composition levy also. Then, in case you are a registered person opting for composition levy, so you are already registered with the department, but now you want to opt for composition levy. So in that case again, we will be intimating the department in the prescribed form. The forms are given on the GST portal, so you need to file that form, get all the required details and apply for composition levy. Now, remember in these case where a person is already registered and he wants to opt for a composition levy, and in that case the effective date of composition levy will be the beginning of the financial year. So the year in which you want to opt for your composition levy, beginning of that financial year will be the effective date of composition levy in case you are registered person opting for composition levy. Now, the next thing we need to do is we need to check the turnover limit for composition levy. Okay. So, turnover limit in preceding financial year to opt for composition levy under section 10.1. So, as I said, first of all, you will be checking under your section 10.1. So, for special category states except Assam, Himachal Pradesh and Jammu and Kashmir, we have to check the turnover limit. The turnover limit should be 75 lakhs. So in case if you are crossing this limit, you will not be eligible to opt for composition levy under section 10.1 in case of special category states except the state of Assam, Himachal Pradesh and Jammu and Kashmir. And for all the remaining states, the limit that you have is 1.5 crores. Then turnover limit in preceding financial year. to opt for composition scheme under section 10(2)(a). So now suppose if you are not eligible for section 10(1) and section 10(2), then in that case you will be going to check whether you are eligible to apply for composition levy under section 2(a). So under section 2(a), the turnover limit is 50 lakh rupees and the rates of taxes are, see, for goods, if the person is a manufacturer of goods, then in that case the person can pay 1% of turnover. Now these 1% is your half percent CGST plus half percent SGST or half percent of your UTGST. Combined total GST that you will be paying in this case is 1%. Then in case you are a restaurant service provider, okay, and you are also you are also giving certain goods, okay, you are also supplying goods and you have restaurant services, in that case the applicable rate is 5%, that is your total rate is 5%, combining of 2.5% of CGST and 2.5% of SGST or UTGST of the turnover. And in case if you are not a manufacturer, or in case you are not providing restaurant services along with the goods and you are providing or you are supplying any other goods, then in that case again the applicable rate is 1% of total turnover of taxable supplies. Remember, here you only need to pay taxes on taxable supplies. You might be having some exempt supplies also. So for calculating, for checking your turnover, all your taxable and exempt supplies will be included, but the GST that you will be levying in case of other goods is 1% of turnover of the taxable supplies. Now, if you were supplying services, then the applicable rate is 6%, okay, 3% CGST and 3% SGST or UTGST of the turnover. So total effective tax that you will be paying in composition scheme for services will be 6% of your turnover. Now there are certain conditions and restrictions for levying this for this composition scheme. So the person who is opting for composition should neither be a casual taxable person nor a resident taxable person. So in case if you are a casual taxable person or a non-resident taxable person, then you are not eligible to opt for composition scheme. And in case if you are paying tax under 9(3) or 9(4) on inward supplies, again in that case you cannot apply for composition scheme. Is not engaged in the manufacture of notified goods or notified services also in case of composition scheme under section 2(a). So remember, if you are opting for composition scheme under section 10(1), then you have to check whether you are in the manufacture of notified goods. If you are in the manufacture of notified goods, you will not be allowed to opt for composition scheme. And in case you are opting for section 2(a), then you will not be allowed to go for composition scheme if you are giving any notified services. Now shall mention the words composition taxable person not eligible to collect tax on supplies at the top of the bill of supply issued by him. So whatever supplies you are making, you are mandatorily required to write at the top of the bill of supply that you are issuing to every person that you are a composition taxable person and you are not eligible to collect taxes on supplies. So these words should always be mentioned on the bill of supply that you are issuing. Shall mention the words composition taxable person at a prominent place at his place of business. So wherever you are running your business, okay, on your place of business, you should mention prominently. Prominently meaning that whosoever is coming to your place of business should be easily able to read that you are a composition taxable person. Okay, this should be very prominently, it should be visible and it should be in a much bigger font so that it can be easily seen that you are a composition taxable person. Now, goods notified for a registered person opting for composition scheme under section 10(1). So see, we have seen that if you are engaged in the manufacture of notified goods, that you cannot opt for composition levy. So what are these goods? These goods are ice cream, pan masala, tobacco, aerated waters, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil meals or similar siliceous earths, building bricks, earthen or roofing tiles. So in case you are opting for any of these things, any of these supplies of these goods, then in that case also you are not eligible for opting for composition levy. Now, there are certain specific people who are not eligible to opt for composition scheme. So first column we have registered person who is not eligible for composition scheme under section 10(1). So as we have seen earlier, for composition scheme you have section 10(1) and you have section 10(2)(a). So who are the people who are registered but they are not eligible for applying for composition scheme under section 10(1)? So if you have any supplier engaged in making any supply of goods or services which are not leviable to tax, that is non-taxable supplies. Okay. So if you are any person who is engaged in making the supply of goods or services but which are not leviable, so you are only engaged in making non-taxable supplies, then in that case you will not be allowed to opt for this composition scheme. Then, if you are supplier engaged in making any interstate outward supplies of goods or services. So, what is your interstate supply of goods? So, if you are supplying from one state to any other state, okay, in that case you are always ineligible to opt for composition scheme. To be eligible for composition scheme, one of the conditions is that you should be making only intrastate supplies. Okay, so whatever supplies you have, that should be within the same state only, otherwise you are not eligible for composition scheme. Then next we have is person supplying any services through an electronic commerce operator who is required to collect tax at source under section 52. So if you are an e-commerce operator and you are required to collect the tax at source under section 52, in that case also you cannot opt for composition levy. Then if you are any manufacturer of ice cream, pan masala, tobacco, aerated waters, fly ash bricks, so these are the notified goods, and if you are supplying or if you are manufacturing any of these notified goods, okay, remember here the word is manufacturer. So if you are a manufacturer of any of these notified goods, that is ice cream, pan masala, tobacco, aerated waters, fly ash bricks, fossil blocks, then similar siliceous earth, building bricks, earthen or roofing tiles. In case you are in manufacture of any of these notified goods, then also you are ineligible to opt for your composition scheme. Then we have already seen this, a supplier who is either a casual taxable person or a non-resident taxable person will not be allowed to opt for composition scheme. Then in case you are supply of services same as provided in section 10(1), that is a registered person opting for composition scheme under section 10(1) is allowed to supply services other than restaurant services along with supply of goods or supply of restaurant services of value not exceeding 10% of the turnover in the preceding financial year in a state or union territory or 5 lakh rupees, whichever is higher. So if you are supplying any services which are other than your restaurant services along with the supply of goods, or you are supplying any other services along with the supply of restaurant services, then you will check two things. The first one is that whatever is the value of services that you are supplying, it should not exceed 10% of the turnover in the preceding financial year in a state or union territory, and second limit you will check is 5 lakh rupees. So higher of these two amounts, that is the amount of services that you are allowed to provide. Okay. So here, while computing turnover in a state or union territory, please remember this is very important point, that while computing the turnover in a state or union territory, interest on loans, deposits or advances will not be taken into account. Okay. So you don't need to add the interest on loans, deposit and advances when you are computing your turnover. But remember, it is only interest. So, any processing fees or any other charges except interest is there on loans, deposits or advances, then that amount will be calculated when you are computing your turnover for a state or a union territory. Now, in case if you are not eligible for section 10(1), then you can check section 2A if you are eligible to opt for composition under your section 2A. So registered person who is not eligible for for composition scheme under section 2A. So the way we saw that certain people are not allowed to opt for composition scheme under section 10(1). Similarly, we have certain people, registered persons, who are not eligible to opt for composition scheme under section 10(2)A. So any supplier engaged in making any supply of goods or services which are not leviable to tax, this is similar to what is applicable under your section 10(1). So if you are only a supplier of non-taxable supplies, that is you are already not paying any taxes. Why? Because you are supplying only non-taxable supplies. In that case, you are ineligible to opt for composition levy both under your section 10(1) and under your section 10(2)A. So simply you can remember one thing: if you are in exclusive supplies of non-taxable goods or services, then you cannot opt for composition scheme. Then next point we have is supplier engaged in making any interstate outward supplies of goods or services. Again, this is a common point for both your section 10(1) and section 10(2)A. So if you are supplier and if you are making any interstate supplies, okay, it can be supplies of goods or supplies of services. The important point that you need to remember is that if you are engaged in any interstate, that is from one state to another state or from one state to another union territories, in that case you are ineligible to opt for your composition scheme. Then next one is person supplying any services through an electronic commerce operator who is required to collect tax at source under section 52. Again, this is a common point. So whether it is a composition scheme under section 10(1) or under section 10(2)A, if you are an electronic commerce operator, that is if you are an eco and you are required to collect the tax under section 52, that is you are required to deduct TDS under section 52, in that case you will be again ineligible to opt for your composition scheme. Then next we have is manufacturer of notified goods or supplier of notified services. So if you are either manufacturing the notified goods will remain the same that you are checking for your section 10(1). Okay, and for section 10(2)A, you need to remember one additional thing, that is even if you are you are a manufacturer of notified goods or you are a supplier of notified services, both these things will make you ineligible to opt for your composition scheme. Then again, this is a common point. Supplier who is either a casual taxable person or a non-resident taxable person. So in case if you are a casual taxable person or in case you are a non-resident taxable person, then in that case you are not allowed to opt for composition levy either under your section 10(1) or under your section 10(2)A. Both these sections will not allow you to opt for composition scheme if you are a casual taxable person or a non-resident taxable person. Now, We have some certain other points that we need to keep in mind if we are opting for this composition levy. So what I see, if I am a regular taxpayer, then I need to issue a tax invoice, okay? For every supply and of goods or services that I am making, I'll be issuing a tax invoice. So now, in case you are opting for composition levy, in that case, you are supposed to issue bill of supply, okay? You will issue bill of supply and not tax invoice. Then, if you are opting for a composition levy, then you shall not collect tax. Tax shall not be collected from recipient of supply. Okay. So, in case you are opting for composition scheme, you will not collect any taxes from the recipient of supply. Next thing is input tax credit shall not be availed. So in case you are opting for composition levy, you are not supposed to take any input tax credit. Okay, you should not take any ITC on any of your supplies. Then composition scheme, if availed, shall include all registered persons having same PAN. This is again a very important point. Many times questions come on these point. Okay. So see, if you have, suppose you have one principal place of business and you have 5 additional place of business. Now, all of these are distinct establishments of the same person. Why? Because all of them are having same PAN number. Okay. So suppose if you are in the state of Tamil Nadu and you have obtained this registration number for 5 different districts. Okay. Now for each of them your PAN number will be same. So suppose district 1 you want to opt for composition scheme. In district 2 again you want to opt for composition scheme. But for some reason in district 3, 4 and 5 I want to opt for regular scheme. So what our GST law says that composition scheme if availed shall include all registered persons having same PAN. So if I am opting for composition scheme for location A and location B, then I will also have to opt for composition scheme for location C, D and E. I cannot opt for composition levy for one location and for regular scheme for other locations. So each of these 5 locations which are having common PAN number for registration, they all are supposed to either stay in composition scheme or leave the composition scheme. Okay. And this condition is also applicable wherein for some reason you are not eligible for composition scheme. So suppose for these 5 locations you had composition scheme. Now because of some reason at location A your eligibility to go for composition scheme is now no longer fulfilled. Okay, you are liable to be registered in your regular scheme because of some reasons. Some of the compliances are not met at location A. Now in this case all the 5 locations A, B, C, D and E, each one of them will have to cancel their composition scheme and will have to come in regular scheme. So all the 5 can either be in composition scheme or can be in regular scheme. This can be voluntarily, or if you are breaching any, or if you are ineligible for opting for composition levy because of any reasons. Then penalty shall be imposed in case of irregular availment of composition scheme. So in case if you are not availing this composition scheme properly, if you are taking it improperly or you are not opting for it irregularly, then in that case you will be leviable for penalty. Okay, penalty will be imposed on you in that case. So now this completes the provisions. We will see certain questions for this. Okay. See this question number 6. Sultan and Sons, a proprietorship firm based in Nagpur, Maharashtra, is a wholesaler of a taxable product P and product Q exempt by way of a notification only within the state of Maharashtra. So the Sultan and Sons is providing this supply of goods and services only within the state of Maharashtra, that is your intrastate supply. Now what is this providing? So they are having one taxable product P and one exempt product Q. Now we are given, and see, it is in the state of Maharashtra. Its aggregate turnover in the preceding financial year is 130 lakhs. The firm wishes to opt for composition scheme under subsection 1 and 2 of section 10 in the current financial year. So for current financial year, in order to opt for composition scheme, what you will check? You will check the turnover of your preceding financial year. It should not be crossing 1.5 lakhs. Sorry, yeah, it should not be crossing 150 lakhs, and see, 150 lakhs for the state of Maharashtra. Then what we will check is, say it is providing intrastate supplies, the turnover limit condition is also met. Now what they are saying, however, its accountant is of the view that a person engaged in making supply of exempt goods is not eligible for the said scheme. So as we have seen earlier in section 10(1), see, for section 10(1) for goods in others category, it is applicable only for turnover of taxable supplies, and for manufacturer it is simply turnover. So here you can be making taxable or exempt supplies, and for this section the applicability is only on taxable services. Now, okay, discuss, fine. Assume that Sultan and Sons is not engaged in manufacture of goods as notified under section 10(2)(e). So let's check the answer for this. Okay, see. The view taken by the accountant of Sultan and Sons is not valid in law. A registered person with an aggregate turnover in a preceding financial year up to 1.5 crores is eligible for composition levy under section 10(1) and 10(2) in Delhi. This should be in Maharashtra. Okay, in question we are given Maharashtra. Now, further, such person must not be engaged in making any supply of goods or services which are not leviable to tax under this act, and must not be engaged in making any interstate outward supplies of goods or services for being eligible to pay tax under the said scheme. So what they are saying is that you should not be engaged in making any interstate outward supplies, or you should not be engaged in any supply of goods or services which are not leviable to tax. Now, in the given case, the aggregate turnover of Sultan and Sons does not exceed 1.5 crores. Okay, so turnover limit for the preceding financial year we are eligible. We are not exceeding 1.5 crores. Our turnover for the preceding financial year was 1.3 crores only. The next condition, that we are supplying goods only in the state of Maharashtra. So further, it is engaged in making only intrastate supply of goods, and product P supplied by it is taxable and product Q supplied by it is leviable to tax though exempted by way of notification. So see, both these products are coming in the category of taxable products only. Okay, this product Q is an exempt product, meaning that for by notification the government has exempted that product, but that product itself is not a non-taxable product. So in this case, since all the conditions for opting for your composition levy are being fulfilled, so this Sultan and Sons is eligible for opting for composition scheme. Therefore, so see, In the given case, the aggregate turnover of Sultan and Sons does not exceed 1.5 crores. Further, it is engaged in making only intra-state supply of goods and product P supplied by it is taxable. Product Q supplied by it is leviable to tax, though exempted by way of notification. Please mark this line. You can highlight this one. This is the important thing of these questions. Now, therefore, it is eligible for composition levy under section 10(1) and section 10(2) in the current year. Now, let's go to the next question. Okay. A person availing composition scheme under subsections 1 and 2 of section 10 in Haryana during a financial year crosses the turnover of 1.5 crores in the month of December. Okay. So, in the month of December, your turnover of 1.5 crore is being crossed. Will he be allowed to pay tax under composition scheme for the remainder of the year, that is till 31st March? Please advise. So what is happening is this person is crossing the turnover limit of 1.5 crores in December. So now the question is whether that person will be allowed to pay taxes under composition scheme till 31st of March. So let's check. So what do you think? Will that person be allowed or not? See, the person will not be allowed to stay into composition scheme the moment your this threshold limit is crossed. So the answer, as I said, is no. The option to pay tax under composition scheme lapses immediately from the day on which the aggregate turnover of the person availing composition scheme under section 10(1) during the financial year exceeds the specified limit, that is 1.5 crores. So the day this turnover limit is being crossed, you are no longer eligible to opt for your composition scheme. Once he crosses the threshold, he is required to file an intimation for withdrawal from the scheme in the prescribed form within 7 days of occurrence of such event. Okay. So once this limit is crossed, the threshold limit to opt for composition levy is being crossed, you are not eligible to further retain your composition levy scheme, and you will be required to file an intimation for withdrawal from the scheme in the prescribed form within 7 days of occurrence of such event. So see, in this question our limit is getting crossed in December. Okay. The turnover limit of 1.5 crores is getting crossed in December. So now let's assume it's getting crossed on 31st of December. In that case, by 7th of January, you should intimate to the department that you are no longer eligible to opt for this composition scheme and you are withdrawing the composition scheme. Okay. Then every person who has furnished such an intimation may electronically furnish at the common portal a statement in prescribed form containing details of the stock of inputs and inputs contained in semi-finished or finished goods held in stock by him on the date on which the option is withdrawn within a period of 30 days from the date from which the option is withdrawn. So see, in case when you become ineligible to go for composition scheme, then what you need to do is, along with that intimation of the withdrawal of composition scheme, you also need to file one more electronic intimation on the common portal. So you need to file a statement in the prescribed form which should have details of the stock of inputs, the inputs that are contained in your semi-finished goods and your finished goods which are held in stock. So whatever this inputs, semi-finished goods inputs and finished goods which are held in stock by you on the date on which the option is withdrawn. Okay. So all that things you should be giving in a prescribed form in a statement, and all these details you should give within a period of 30 days from the date from which the option is withdrawn. So in this question, for example, I had taken that you are withdrawing for your option till 7th of January. So let's say on 7th of January you are withdrawing from the option. So till 30 days, next 30 days, that is by your 6th of February, you should be giving all these details of all the inputs that you have, all the finished goods that you have in stock, and all the goods which are semi-finished goods but which have your inputs. Okay, all these things you should be providing the details within 30 days from the date on which you are opting to withdraw this option. Now, next question. Question number 8. Determine whether the suppliers in the following cases are eligible for composition levy under section 10(1) and section 10(2), provided their turnover in preceding year does not exceed 1.5 crores. So what they are saying is that the limit of turnover is not exceeding 1.5 crores. So now tell us in all these cases whether you are eligible to opt for composition scheme or not. The first one you have is Mohan Enterprises is engaged only in trading of pan masala. You remember, pan masala is one of the notified goods in Rajasthan and is registered in the same state. So see, let's see the answer. A supplier engaged in the manufacture of goods as notified under section 10(2)(e) during the preceding financial year is not eligible for composition scheme under section 10(1) and section 10(2). Ice cream and other edible ice, whether or not containing cocoa, pan masala, tobacco and manufactured tobacco substitutes, aerated waters, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil meals or similar siliceous earths, building bricks, earthen or roofing tiles are notified under these categories. So all of these goods are coming under your notified goods category, and if you are a manufacturer of any of these notified goods, then you are not eligible for composition scheme. Remember the word manufacturer. Now here in the question, if you see, we are not given manufacturer, we are given trading. Please highlight this word trading. Okay, so since you are only trading in these goods, you will be eligible for your composition scheme. See, however, in the given case, since Mohan Enterprises is engaged in trading of pan masala and not manufacture, you can highlight this, and its turnover does not exceed 1.5 crores. So see, these two conditions are being met. Now you need to check whether other conditions are fulfilled or not. So that is the reason they have given the answer as he is eligible for composition scheme subject to fulfillment of specified conditions. So in case if he is fulfilling all the other specified conditions, then in that case he will be eligible for composition scheme. Now second part. Sugam Manufacturers has registered offices in Punjab and Haryana and sells goods manufactured by it in the neighboring states. So see, you are registered in two states, and also you are selling the goods which are manufactured in the neighboring states. So what do you think? Will you be eligible or not? See, if you are supplying any goods or services interstate, meaning within different states, then in that case you are not eligible for composition levy under any of the sections 10(1) or 10(2)(a). So here, since the supplier of interstate outward supplies of goods or services is not eligible for composition levy, sugar manufacturer is not eligible for composition levy, okay, because you are doing interstate supplies of goods. Now, question number 9. Subramaniam Enterprises has two registered places of business in Delhi. Its aggregate turnover in the preceding financial year for both the places of business is 120 lakhs. So see, it has two registered places of business in Delhi. Okay. So these two people will be distinct persons. They both are having same PAN number. Now another situation that they are giving us is the turnover for a preceding financial year is 120 lakhs. It is not crossing the threshold limit of 150 lakhs. So you are eligible for your composition scheme. Now, what the question is further asking, it wishes to pay tax under composition levy under section 10(1) and 10(2) for one of the places of business for the current financial year while continuing to pay under normal levy for other. See, either you can opt for both for composition scheme or you can opt for regular for both for composition scheme. You can never do that for one location I want to go for composition scheme and for another location I want to go for normal scheme if you are having same PAN number in registration of both these places. Now they are asking us to advise whether he can do so. So as I've already told you, he cannot do so. Let's read the answer and go through it. See, a registered person with an aggregate turnover in a preceding financial year up to 1.5 crores is eligible for composition scheme under section 10(1) and 10(2) in Delhi. Now, since the aggregate turnover of Subramaniam Enterprise does not exceed 1.5 crores, it is eligible for composition scheme in the current year. However, all registered persons having same PAN number have to opt for composition scheme. So, all of the people should opt for composition scheme or they should not. One cannot take and the other can take regular scheme, that is not allowable. So, if one such registered person opts for normal scheme, others become ineligible for composition scheme. Okay, so the moment one of your distinct person is going for normal scheme, then others will automatically become ineligible for composition scheme. Thus, Subramaniam Enterprises either have to opt for composition levy for both the places of business or under normal levy for both the places of business. So they can either go for composition scheme for both the places or they can go for regular scheme for both the places. One will go for composition and another will not go is not possible in our GST Act. Okay, they are not giving us that option. Now, the next question. Question number 10. Mr. Ajay has a repairs center registered under GST where electronic goods are repaired or serviced. Okay. So what they are doing? They are providing this repair services of electronics goods. His repair center is located in state of Rajasthan and he is not engaged in making any interstate supply of services. So he is only providing the supply of services in the state of Rajasthan. His aggregate turnover in the preceding financial year is 45 lakhs. With reference to the provisions of the GST Act, examine whether Mr. Ajay can opt for composition scheme under section 10(1) and 10(2) for the current financial year or whether he is eligible to avail the benefit of composition scheme under section 10(2)(a). Considering the option of payment of tax available to Mr. Ajay, compute the amount of total tax payable by him in the current financial year assuming that his aggregate turnover in the current financial year is 35 lakhs. Now, next question is, will your answer be different if Mr. Ajay procures few items required for providing repair services from neighboring state of Madhya Pradesh? Now, please highlight this line, okay? What they are saying is, he is procuring few items, so he is purchasing certain items from the neighboring state. Remember, he is not supplying items, he is purchasing items. These are his inward supplies and not outward supplies. Now let's come to the, please you can mark this question as an important question, okay? So see, section 10(1) provides that a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores and rupees 75 lakhs in the special category states except Assam, Himachal Pradesh and Jammu and Kashmir may opt to pay in lieu of the tax payable by him an amount calculated at the specified rates. So if you are not crossing this turnover limit of 1.5 crores and 75 lakhs in case of special category states, then you are allowed to pay tax at specified rates, okay, other than the taxes that are required to be payable by you under this composition scheme. However, as per proviso to section 10(1), person who opts to pay tax under composition scheme may supply services other than restaurant services of value not exceeding 10% of the turnover in a state or union territory in the preceding financial year or 5 lakh rupees, whichever is higher. So what you will be doing is, you will be checking two things. In case if you are providing any services other than restaurant services, then the value of those services should not exceed 10% of the turnover, or you should be providing those services for 5 lakhs. Higher of these two limits is the amount of services that you can provide other than your restaurant services in case if you want to opt for composition scheme under section 10(1). Now, in the given case, since Mr. Ajay is an exclusive supplier of services, so what Mr. Ajay is doing? He is providing services other than restaurant services. So he is providing only repair services, okay? So he is not eligible for composition scheme under section 10(1) and 10(2). So since he is providing services other than restaurant services, he is providing only repair services. So in this case, he is not eligible to go for composition scheme under section 10(1) and section 10(2). However, section 10(2)(a) provides an option to a registered person subject to certain conditions whose aggregate turnover in the preceding financial year is up to 50 lakhs and who is not eligible to pay tax under composition scheme under section 10(1) and section 10(2). So see, if you are not eligible to pay this taxes under if you are not eligible to opt for composition scheme under your section 10(1) and 10(2), then you have another section 10(2)(a). So you can check if you are eligible for section 10(2)(a). So what your section 2(a) is giving the conditions that if your aggregate turnover in the preceding financial year is up to 50 lakhs and if you are not eligible for composition scheme under your section 10(1) and 10(2), in that case you can go for section 10(2)(a) and you can pay taxes at 3% CGST plus 3% SGST. Your effective rate will be 6% of the turnover of the supply of goods and services in the state or union territory. So, if you are not eligible for section 10(1) and 10(2), and if your turnover is up to rupees 50 lakhs in the preceding financial year, then you are eligible to go for section 10(2)(a). The effective rate for section 10(2)(a) is 6% of your turnover of supplies of goods and services. Okay, it is 3% each for your CGST and 3% for your SGST or UTGST. Now, thus, in the view of the above mentioned provisions, Mr. Ajay is eligible to avail the composition scheme under section 10(2)(a) as his aggregate turnover in the preceding financial year does not exceed 50 lakh and he is not eligible to opt for the composition scheme under section 10(1) and 10(2). So see, Mr. Ajay, we have already seen that Mr. Ajay is not eligible under section 10(1) and section 10(2). Why? Because he is providing services other than restaurant services. So even if he is not crossing the threshold limits that are applicable in your section 10(1) and 10(2), still he is ineligible to opt for composition levy under those sections owing to him providing services other than restaurant services. So in such case, we have another option available, that is your section 10(2)(a), and in that case you are checking whether your previous years, that is your preceding financial year's turnover, is not crossing the threshold limit of 50 lakhs. So here in this question we were given that in the preceding financial year turnover of Mr. Ajay is 45 lakhs. Okay, see, it is 45 lakhs. So it is not crossing the limit of 50 lakhs. So he is eligible to go for section 10(2)(a). Okay, so he will be eligible to avail this composition scheme under section 10(2)(a). Now, we also need to calculate here the taxes that will be payable by him. So what section 2A says, that your effective rate will be 6% of the turnover. Now see, what is the turnover of his current financial year? So see, you need to take care that when you are checking the limit of turnover, in that case you have to check the limit of the preceding financial year, and while you are calculating your taxes, you will always calculate for taxes for the current year's turnover. Okay, so see, here his aggregate turnover in the current financial year is 35 lakhs. So this is the amount on which I will be calculating my GST tax of composition scheme, and this is the turnover limit that I will be checking when I am checking the composition eligibility for this person. So now see, taxes that they have calculated. Thus, the amount of tax payable by him as per the composition scheme under section 10(2)(a) is 6% of 35 lakhs. So if you calculate 6% of 35 lakhs, okay, 35 lakhs into 6%, you will get the taxes of rupees 2,10,000. And see, this is effective rate of 6%. So 2,10,000 is your final taxes that will be payable in section 10(2)(a). Now next, what they have asked in the same question, that will your answer be different if Mr. Ajay procures few items? See, he is getting supply inwards. Okay, he is not providing supply outwards in other states. So his supply is still in his own state only. Okay, he is registered in this state of Rajasthan. So what he is doing is, he is supplying only in the state of Rajasthan. Only thing that he is doing is, he is getting some raw materials from the neighboring state. So in that case, his eligibility to opt for composition scheme will still be there. See, let's read the answer. A registered person cannot opt for composition scheme under section 2A, 10(2)(a) if inter alia he is engaged in making any interstate outward supplies. Please highlight the word interstate outward supplies. However, there is no restriction on interstate procurement of goods. So if you are procuring the goods, you can procure them in from other states too. The only condition which makes you ineligible for composition scheme is outward supplies of interstate. So hence the answer will remain same even if Mr. Ajay procures few items from the neighboring states of Maharashtra. So since he is not supplying anything outside the state of Rajasthan, he is only supplying in the state of Rajasthan. The only